This is an Uncovered Japan Company research report on Shin Nippon Biomedical Laboratories, ticker 2395, or SNBL. It is Japan's first contract research organization and its domestic leader in non-clinical drug safety testing. The investment story is a high-margin core that is funding three much less proven forward bets. As of 8 June 2026, SNBL traded around 13 times forward earnings and 1.1 times book, while offering a roughly 4.4% dividend yield. Those headline metrics look inexpensive for a company with a double-digit return on equity, but the market is also looking through an unusually complicated group structure. SNBL's core service is non-clinical testing, the safety work that comes between drug discovery and a first human trial. Its customers are pharmaceutical companies, biotech ventures, and academic groups. In this work, a study that fails regulatory scrutiny is much more expensive than a higher laboratory fee. So quality, documentation, and difficult-to-build know-how matter far more than price. The key distinction is between the CRO core and the consolidated group. In fiscal 2025, the CRO segment earned 7.26 billion yen of operating profit, while the whole group reported just 2.99 billion. The difference is not a small adjustment. It represents the losses and investment spending in the company's newer businesses. SNBL's moat rests on three connected barriers. First, regulatory-grade good laboratory practice systems take years to build in people and process. Second, the shift toward antibodies, nucleic acids, gene therapies, and regenerative medicine demands new forms of safety testing. Third, the necessary animal testing and analytical facilities are expensive and tightly controlled. Together, these barriers support the core's high margins. The reported profit trend looks counterintuitive. Revenue rose from 17.7 billion yen in fiscal 2022 to 32.5 billion in fiscal 2026, about a 16% annual compound rate. Yet operating profit fell from 4.2 billion to 2.7 billion. The report's central finding is that this is largely the cost of deliberate forward investment, rather than a collapse in the core CRO business. Another important feature is that net income has remained above operating profit. In fiscal 2026, operating profit was 2.7 billion yen, while net income was 4.6 billion. That reflects meaningful non-operating income. It cushions earnings, but it also means investors should focus carefully on recurring profitability and cash generation, rather than rely on one headline profit figure. The cost of building capacity is most visible in cash flow. Operating cash flow was solid at 7 billion yen in fiscal 2025, but heavy capital expenditure kept free cash flow negative from fiscal 2023 onward. A future move to free cash flow break-even is therefore one of the clearest operational milestones for this story. SNBL is not just a CRO. Translational Research is developing nasal drug delivery and is the largest current source of investment losses. Metapolis combines geothermal power and a hot spring resort in Kagoshima. U.S. real estate is a newer capital commitment. Each could create value, but all three currently complicate the clean economics of the core testing franchise. Capital allocation is shaped by founder control. The Nagata family's asset management vehicle owns just over 40% of SNBL, giving management room to invest through periods of lower reported profit. That long-term orientation can be a strength, though it also makes minority shareholder alignment an ongoing governance question. The balance sheet and returns need monitoring as the investment cycle continues. The report's scenarios are an author-created framework, not price targets or investment advice. They range from about 1,100 yen in the fiscal 2029 bear case to 1,750 yen in the base case, and 2,500 yen in the bull case. What matters is the set of assumptions behind them: CRO margins, free cash flow progress, and whether the forward bets ever begin to earn their cost of capital. SNBL is a differentiated Japanese CRO with a premium non-clinical testing franchise, a high-margin core, and a valuation that already reflects substantial skepticism. The trade-off is clear. Watch the path to free cash flow break-even and the economics of translational research. For the full source-linked 5-part analysis, continue with the free Uncovered Japan deep dive. For a much deeper look, visit the free deep dives at uncoveredjapan.com. We go beyond the headline numbers to cover the business, financials, valuation, risks, and catalysts. This video is for information and education only. It is not investment advice or a recommendation to buy or sell any security. Always do your own research.